Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Good morning, folks. Welcome back to Wealth Coffee Chats. It is Monday, the 24th of November. Yes, Monday, the 24th of November, folks. How did that happen? It is only a few short weeks until 2025 comes to a close. But anywho, good morning from wherever in the world you're joining us from. I hope you're doing really well. Good morning to the chat box. It's great to see so many of you along this morning. Give me a shout out in the chat where you're joining me from. Folks, my name is Emily Miller and I'm your host today for Wealth Coffee Chats this morning. I work in the advisory team at Positive and I have the pleasure of hosting with you this morning. So on Mondays, the education team are presenting to you. Of course, on Tuesdays, you've got the tax team. Wednesdays, you'll hear from the property management team. Thursdays, you have the financial planning team. And finally, on Fridays for Wealth Coffee Chats, to close out the week, you've got lending and finance. So because it's Monday, we are talking about coaching and education. So welcome back, regulars. It's great to see so many of you in the chat already. Now, if you've listened to me before, you'll know that I absolutely love talking about the psychology behind why we make the decisions that we do. And that's especially around property, money, and investing. And today we're diving into something that changed the way economics understand behavior, and it's called prospect theory. Now, this comes from Daniel Kahneman and Amos Tversky. So these are two giants in behavioral psychology. So this is Nobel-winning prize stuff, folks. Now, prospect theory explains how people make decisions under risk. And the big idea is that people fear losses much more than they value gains. Good morning, Courtney. I can see you there in the chat. Great to see you here this morning. Welcome along. So prospect theory, I'm going to walk you through the 4 core ideas that build the idea around prospect theory and show how they explain some of the behavior that we see in investor hesitation. And this is why having a coach and a strategy is so very important. So give me a yes in the chat if you're up for some behavioral psychology first thing on in Monday morning, folks. I hope you've got a hot cup of coffee. I certainly do. But the first thing that we are talking about this morning here with prospect theory is called loss aversion. So I want you to imagine this. Imagine you're walking down the street and you find $100 laying on the ground. That's great. That feels awesome, right? Now imagine you withdraw $100 from the ATM and later realize that it's fallen out of your pocket and you've got that really sinking feeling. that feeling is much stronger than the joy of finding the same amount. So Daniel Kahneman found that losses feel twice to 2.5 times more painful than an equivalent gain feels good. And this is called loss aversion. So we are all wired to avoid losses at all costs, and this affects everything, and especially with property investing. And this is explaining why people often underestimate risk. They overestimate risk. Let's get that right. They'll overestimate their risk. They'll underestimate the long-term gain, and they will delay decisions that will ultimately help them. So often we'll see people in the coaching field, they'll sit on the fence for years saying, I just want to wait and see, or I'm too scared to borrow right now. Or they're not wanting to invest when markets are rising because, what if the market dips after I buy? Another one we see, avoiding selling an investment at a loss and hang on to them. So hang on to a bad investment because what if it comes good? So it's not logic, folks. This is all psychology, and our brains, our little brains, they hate losing more than they enjoy winning. And this is why clients fear doing the wrong thing more than they desire doing the right thing. So how's all that feeling? Oh, Carolyn Bounds, you're here this morning. Good morning. Yes, love it. Are you happy to hear this, Caroline? I'm glad you are. Look, we're diving in now to prospect theory. For those of you who are just joining us, we've covered the first idea called loss aversion. We're now onto the second idea, which is called a reference point. So Kahneman discovered that people don't judge outcomes purely by their numbers. They judge them compared to what they were actually expecting to get. So people, we all know this, we're all guilty. We have a habit of comparing ourselves to the wrong thing. And in property, we often compare ourselves to what our friends are doing, what our parents did, what the media is saying, what happened in the last boom, what happened in the news headlines, and someone else's success story, and then what we should have done years ago. So this comparison ends up distorting our decision making. So here's an example. Imagine that you've done your tax return, and I hope you've all done them by now. You're expecting a $10,000 tax return, for example, but you get $8,000 instead. Still a great outcome, but that feeling sucks, right? Now someone else expects a $5,000 tax refund, but they end up getting an $8,000 refund. That's amazing. It's exactly the same outcome, but it's a completely different emotion. And this is why people feel like they're behind even when they're doing well. So Kahneman points this out. It's not the outcome that's shaping your feelings. It's the reference point. It's the story that you're telling yourself about that outcome. Now, Kahneman calls this reference point. It's an anchor. So we shape all of our perceptions of gains and losses to that anchor. All right, guys, I hope you're still with me. We're turning our brains on here first thing in the morning. We are on the third point now. The third point of Daniel Kahneman's theory is diminishing sensitivity. So this is one of the most underrated parts of prospect theory, where people will fixate on a small problem and ignore a really big opportunity. So this is one of the most underrated parts of prospect theory, and it's the one that relates most to property. So our brains will react so much stronger when there is a small number, but as the numbers get bigger, our sensitivity ends up fading. So for example, imagine if you had to go from 0 to 5,000, right? Now imagine if you had to go from 700,000 to 705,000. Now that doesn't feel as bad, does it? And why this matters in property is because people will end up panicking about a $25,000 valuation shortfall, yet not blink at hundreds and thousands of missed long-term gains. And they'll end up stressing about interest rates moving 0.25%, but ignore losing, for example, $150,000 in potential equity by waiting. So Kahneman says that once numbers get really big, like with property, because numbers do get big in property, our intuitive judgment stops working properly. It just stops. So this is why people will start obsessing over, a $400 strata fee difference per quarter or something like that, or they'll stress over minor color selections, or they'll delay a purchase over a $2,500 solicitor quote. Yet that same person will ignore a $60,000 annual growth. They'll ignore a tax benefit, and they'll certainly ignore a long-term compounding interest. So people will feel those small upfront losses far more intensely than they feel a large future gain. And this is why a lot of investors struggle with paying for valuations, paying for stamp duty, paying for LMI, even when it unlocks massive wealth and opportunity. And of course, why they avoid paying for quality advice, because the small immediate cost hurts more than the massive long-term gain feels good. And this is why with property investing, it's full of delayed gratification. And that's precisely why it creates that self-sabotage. How are you going in the chat, guys? Oh, Courtney, you love it. So interesting. I'm so glad. I'm so glad you're enjoying it. Very interesting stuff here, folks. So again, we've covered 3 points so far. We are on the home stretch. We are on the fourth and final core idea. And this is called people are risk averse when there is a gain, but they're risk seeking when there is a loss. And this is a really fun one, okay? So when faced with a potential gain, people will avoid the risk. So given a choice between a guaranteed $500 or a 50% chance of winning $1,000, most people take the 500. And Kahneman calls this, where it says that people will prefer the certainty when it comes to gains. But when faced with potential losses, people will take more risk. So if you could choose between a guaranteed loss, if you had to guarantee a loss of $500, but you had a 50% chance of losing $1,000 or losing nothing, most people will gamble. They will take a worse potential outcome just to avoid the feeling of the loss. Now, this explains, folks, why people hold on to losing investments. So why people hold on to a bad investment. They will refuse to sell an underperforming property instead of restructuring. They will delay taking action because they hope things turn around, and they gamble every single time. This is psychology. And this is one of the biggest reasons why people will stay stuck financially. And this is the source of many of the odd behaviors that we see around and we have to mitigate as property coaches. So why am I telling you this? Oh, what we got happening in the chat here? Here we go. Mr. Iron Jaw, you said your property in Southeast Queensland are doing well, but it'd be nice if you had more. Yes, absolutely. Yes, and Caroline Bounds, you have lived bits of this. I bet you have. Yes, along the creation of your portfolio over all of these many years, Caroline. Okay, so why am I telling you this, folks? I've got to round this up. So prospect theory matters. Yeah, prospect theory matters, especially for property investors, because prospect theory explains why we will often freeze and why we will often hesitate or make inconsistent decisions. It's not due to a lack of education or a lack of understanding, but because the human brain is wired to fear losses. It's wired to avoid uncertainty and even procrastinate when the numbers make sense. It's black and white. The numbers make sense, but we'll hesitate. So this is why having a coach and a strategy is really essential, because a coach will provide you with certainty. They will provide you with the ability to reduce all of the uncertainty, and we will replace that fear with facts and context. So we will help you see those opportunities that you would have otherwise missed, and we will help you stop catastrophizing any of those worst case scenarios and start to help you build confidence around all of your numbers and not nerves. So a strategy becomes your true reference point. It's not the media, folks. It's certainly not your friends, and it's not what has happened in the past. So when you have a strategy with someone here at Positive Real Estate, of course, myself or any one of my colleagues, we will assist you in clearly defining your goals and how to get to where you want to get to. So this creates your direction. It removes all of that comparison and anchors you to decisions about your future and not someone else's future, But this is why we hear a lot of investors say, I wish I'd started earlier, right? So, folks, that is prospect theory in a nutshell, and it does explain why we do behave the way we do around money and around property investing. So if this episode has resonated, folks, please share it with someone who needs a little bit of encouragement to take that next step into their financial life. And if you want me to break down more behavioral psychology tools like this, let me know. I love this stuff. So thank you all for listening, folks. And I really hope you have a wonderful week ahead. And I will see you in the next one. Thank you so much for spending so much time with me here this morning. You've been great in the chat. I've loved having you here this morning. Enjoy your week, folks, and I will see you in the next one. Thanks, team. Bye.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.